You are all welcome to the channel. Please subscribe to the channel. You are all welcome to the channel. Please of cash was restricted to coins, which were mostly gold and silver. But with the rise within the amount of currency and therefore the increase in population density, the proportion of gold increased among people, which led to the emergence of thieves and swindlers. Therefore, people started trying to find how to save lots of their money, in order that they decided to preserve their gold in what's called goldsmiths. And that they were taking paper instruments like the quantity of gold they deposited within the goldsmiths. With time, people saw that these receipts and paper checks were safer and more economical for them, since if they wanted to withdraw the quantity of gold at any time, they might do so from goldsmiths. On the opposite hand, those liable for preserving gold within the goldsmiths were paid a rewarding fee, but they saw that folks began to affect receipts and gold accumulated with all of them the more and without them taking advantage of it. In order that they decided to stay 40% of the quantity of gold that they had for the aim of withdrawing if someone wanted to try to so, and to allocate 60% to people lending. But on condition that there's interest on this gold quite the worth of the loan. Then these goldsmiths became places that seemed like banks. But without people knowing that their money goes into investment. If it happened that each one the depositors decided to withdraw all that they had at an equivalent time, there would be a deficit of 60% of the quantity in these places. How do international banks work and the way do they invest money? The word bank is originally derived from English name bank, and its equivalent meaning within the Arabic is bank. The bank is the place where the economic operations that require follow-up, accuracy and speed, like depositing, withdrawing or transferring money, borrowing or paying debts, or making investment certificates occur. All financial banking transactions happen during this place quickly and immediately. The beneficiary is named the customer. This definition applies to all or any international and native banks. Sorts of banks. There are differing types of banks, all of which are similar and differing at an equivalent time. The difference is usually within the category served or services provided. As for the similarities, all banks are dedicated to free financial trading. However, there remains a particular link for all banks, which is that the financial institution. It's the bank that controls all banks within the country. There's no higher authority for any of the banks, even international banks, which are private banks with branches everywhere the planet. Or maybe state banks that are sponsored and funded by the state. Most are under the auspices of the financial institution. The financial institution is the main bank that supervises banking activities directly and publicly. It's the bank that issues currencies or bank notes. And it works to stabilize the state of the currency generally through the supply of money reserves for this currency. The greater the supply of the currency, the lower its value. And since the dollar is the leading currency within the world, the reserve currency of the dollar parallels the supply of other currencies within the financial institution. Therefore, the more dollars available within the country's financial institution, the stronger the economy. Because its currency are going to be parallel to the dollar, which may be a measure of economic superiority in terms of currency trading. Also, the financial institution keeps 10% cash from the budget of any bank within the country, international banks, or credit institutions. It also provides loans to local banks with interest. How do global and native banks win? There are several ways to form banks profit during a very big way, but the foremost important element we must highlight is people's trust within the bank. Because the deposits people place for